This video I'll explain you the construction of income statement, statement of retained earnings and balance sheet when multiple or complex adjusting data or information is given to you at the end of accounting period, that is after trial balance. I don't think we should waste our time how to calculate the gross profit, as we have already learned in previous videos. So similarly, we have to calculate first of all the net sales or the total revenue, then the cost price, that is cost of goods sold, and subtract the cost of goods sold from the net sales, so we can easily calculate the amount of gross profit. So let's start by calculating or finding the amount of sales or sales revenue from trial balance. You can see here the sales is given 600,000. I'm just copying, and then the amount of contra sales, that is sales return, is also given to us. So we just have to subtract the sales return from the sales and we get the result of net sales. So in this way we have calculated total sales revenue or net sales. Now the next step is to calculate cost of goods sold. We start calculation of cost of goods sold by copying opening inventory or inventory at start, that is given in the pre-closing trial balance, which is equal to 11,000. The next step, we have to calculate the net purchases or total purchases for the current period. So here in the trial balance, the purchases, total purchases for the current period is given, that is 2,50,000. Then we have also paid amount of transportation on purchases. So I am writing here from the trial balance 12,000 paid on transportation on purchases, and then defective or inferior goods have also been returned to supplier, that is contra expense account or contra purchase account, which is given in the trial balance equal to 5,000. So now by adding all these, the transportation costs we are adding in purchases and we are subtracting purchase return from the purchases. So in this way we got the net purchase. Now we have to calculate cost of goods available for sale. So we need to add the opening inventory and the net purchases for the current period. So by adding both of them we can easily calculate cost of goods available for sale. The next step is to subtract the unsold part or closing inventory from the cost of goods available for sale. And the closing part of the inventory is normally given in the adjusting data. We can see here. You can see here the adjusting information in the adjusting data. The closing inventory is given, which is equal to 25,000. And we are also aware the information given in the adjusting data must be shown on two sides of accounting equation, or the adjusting information always impact on two sides of accounting equation. So the closing inventory we have to write in the balance sheet also. Look at here in the balance sheet, current assets, under the heading of current asset I am writing the closing inventory. So any information given in the adjusting data must be written on both sides of accounting equation. Okay, now I am just subtracting the closing inventory or unsold part of the inventory from the cost of goods available for sale. So in this way I have calculated cost of goods sold. Now we have to subtract the cost of goods sold from the net sales. So you just subtract the amount of cost of goods sold from the net sales. In this way we got the result of gross profit. Now the next information is regarding other operating expenses. So we have to be very careful while calculating other operating expenses. look at the adjusting data, the second information or which is related to the rent. Here, the amount of rent is outstanding, rupees 4,000. When we say outstanding, on the one side it is our expense, and on the other side it is also our liability. The outstanding means unpaid rent or the accrued rent. We have received the services, but the amount has not been paid yet. So we can calculate the rent expense. As we can see, the amount of rent expense is already given in the trial balance, which is equal to 16,000, and the 4,000 also given in the adjusting data. So in this way, total rent expenses is become equal to 20,000. But we have to be very careful. Outstanding means it is a liability. Out of for 20,000 total rent expense, 4,000 is unpaid or due. So I am just copying here rupees 4,000 in the liability area. The next is insurance expired. The third one is insurance expired for the year rupees 8,000. As already mentioned in the adjusting data. Remember, adjusting data is accurate and reliable. We assume while calculating financial statement that any information given in the adjusting data is accurate and reliable, because it is provided at the end of accounting period. So here it is already mentioned that amount of insurance expense or insurance expired is equal to 8,000. So I just have to copy directly rupees 8,000 in the column of insurance expense. Now we can see in the trial balance the amount of insurance was prepaid or paid in advance is equal to rupees 15,000. So out of those 15,000, 8,000 have been expired. 7,000 is still balance. So you can calculate by subtracting 8,000 from 15,000. So here the remaining balance must be shown in the balance sheet also. The next transaction is about the actual salaries expired. Again, as we can see, the expired or the expense is already given to us. The amount of expense or expired is given to us, which is equal to 9,000. So I directly have to copy the amount of expense in the income statement, because the information given in the adjusting data is accurate and reliable. We assume it actually. Now look at the trial balance. The amount of salaries expense given in the pre-closing trial balance equal to 22,000. Out of those 22,000, 9,000 have been expired. Actually, salaries expired by rupees 9,000. So actual expense is not equal to 22,000, it is equal to 9,000. The remaining amount is unexpired or it is prepaid. So out of 22,000, 9,000 have been expired and the remaining is unexpired or the balance. So we have to write in the balance sheet 13,000. The next is advertising unexpired. Remember, unexpired means which is not expired or prepaid. The amount of advertising is unexpired during the year 20,000. So now we have to calculate the amount of expired also. So here you can see in the pre-closing trial balance, advertising expense is given to us is equal to 30,000, and in the adjusting data, out of those 30,000, 20,000 have been unexpired, which means 10,000 have been expired. Out of 30,000, 10,000 is expired. So 20,000 are unexpired. Alright, now we also have shown in the balance sheet also. The next transaction is related to the office supplies. Office supplies is our current asset account. Here it is mentioned amount of office supplies unused. Again, unused means we directly have to write the 7,000 in the balance sheet. The part of office supplies is unused or in hand is equal to rupees 7,000. So let's find the amount of office supplies used or expired or expense. As we can see in the trial balance, the office supplies balance is equal to 12,000. So out of those 12,000, 7,000 is still unused. It means 5,000 have been used. So I am writing here 5,000. And here the balance is equal to 7,000, which is unused part of office supplies. So out of 12,000 we can subtract the amount used or expired, and we can easily find or calculate the amount of unexpired. Now the next is we have to calculate the amount of accrued interest. Okay, we calculate the amount of interest after calculating earning before interest and taxes. So right now we move towards the next transaction, that is related to the adjusting entries. Related to the tangible fixed assets, that is depreciation. So the next transaction is allocated 10% depreciation on all fixed assets. Now let's see, in the pre-closing trial balance we have two fixed assets are shown. One is office equipment and the other is office furniture. So we just need to calculate the 10% on the historical cost of office equipment and the furniture. Remember, depreciation is calculated on the historical cost or the cost price. So here the amount of office equipment is given 400,000 or 4 lakh. So we just need to calculate the 10%. Similarly, we just have to calculate the 10% on the cost of furniture. But we need to be very careful, as I have again and again mentioning you, the information given in the adjusting data must be impact or must affect on the two sides of accounting. So don't forget the amount of depreciation. Don't forget to write the amount of depreciation in the balance sheet as well. So how would you mention in the balance sheet? First of all, in the fixed assets area, you will write the historical cost of your fixed assets. Then you need to subtract the accumulated depreciation on office equipment. Remember, the 50,000 are already given in the trial balance. The amount of accumulated depreciation on office equipment is already given in the trial balance, which is equal to 50,000. And 40,000 here in the income statement, that is depreciation for the current period. The amount shown in the income statement is the depreciation for the current period. So total accumulated depreciation on office equipment is equal to 90,000. Now we can calculate the book value or the balance by subtracting accumulated depreciation from the historical cost of the office equipment. Here it is office equipment. Alright, the next is the furniture account. Okay, we write the cost of furniture first, and then we write the depreciated amount of office furniture, as accumulated depreciation is not given in the trial balance for the office furniture. Maybe we have purchased the office furniture in the current period or in the current year. That is why we are only subtracting rupees 25,000 from the cost of machine. So depreciation expense and accumulated depreciation is equal for office furniture. Now I am just adding the amount of total fixed assets. So here in this way we have also calculated total fixed assets in the balance sheet. Now, as already we have calculated all the expenses, we can sum up the expenses and then we can subtract all the other operating expenses from the gross profit, and we got the result of earning before interest and taxes. Now we have to calculate the amount of interest, and we have to be very careful while calculating the amount of interest. How would I calculate the amount of interest? As in the adjusting data, it is already mentioned. Here you can see accrued interest on bonds and notes payable. We can see in the 7th transaction given in the adjusting information, the accrued interest on bonds and notes payable. So we have to calculate the amount of interest on the current and the fixed liability as well. So first of all, let's see in the trial balance, the amount of bonds payable is equal to 1,50,000. So I have to calculate 15% on 1,50,000 first, and then look at the 10% notes payable. So first of all, 90,000 is given in the trial balance, and I have to calculate the 10% on notes payable. So in this way, I have calculated the amount of interest, which is equal to 31,500. Remember, this 31,500 is a liability, so we don't need to forget writing amount of interest in the balance sheet also. The yellow shaded area suggests that item shown in an adjusting data must be impact on two sides of accounting equation. Now subtract the amount of interest from the earning before interest and taxes. So we can calculate the amount of earning before taxes. Now we have to calculate 40% taxes. In this way, we also have calculated, we need to calculate 40% on earning before taxes, which is equal to 2,01,500. So here in this way we have calculated the amount of taxes also. Now finally, the results of income statement in the form of earning after tax, which is equal to 1,20,900. So again, don't forget to mention the result of taxes in your balance sheet. It is a liability, we have to pay the taxes to the government. Now next statement is the statement of retained earning. So let's see how we have to calculate the statement of retained earning. We need to write the initial balance if given in the trial balance. Yes, it is equal to 100,000. You just have to copy it. Then next, you have to add the earning after taxes in your opening balance of retained earning. In this way, we can calculate the total amount of retained earning. Now, out of the total amount of retained earning, an amount given to shareholder is called dividend. We have to subtract the dividend, and also if any amount is appropriated or reserved, also have to subtract it from the total retained earning. So here in this example, we can see the amount of dividend is given to us. There are two types of dividend as decided maybe in an annual general body meeting, that 10% dividend is given to 10% dividend, 10% cash dividend and 20% stock dividend given on the paid up capital. So we can calculate 10% cash dividend first. As we can see, the amount of paid up capital is already given to us. We just have to calculate the 10% on cash paid up capital. So it is equal to 14,000. Again, we need to calculate 20% for the stock dividend. So we easily calculate by copying 1,40,000 paid up capital from the trial balance and 20% equal to. Now you can see the 10th transaction in the adjusting information or data in which directors appropriated rupees 15,000 फॉर ऑफिस इक्विपमेंट। तो 15,000 रुपये हमने रिजर्व करके रखे हैं अपने ऑफिस इक्विपमेंट के लिए, फ्यूचर के लिए। सो टोटल reserves and fund now become equal to, we can add them, so it is equal to 57,000, and closing balance of retained earning now becomes equal to 1,63,900. Now don't forget to write each and everything in the balance sheet also. Look at the amount of cash dividend, it is liability, because up till now we have declared or made an announcement in an annual general body meeting. The amount of dividend is not given to shareholders yet, so it is a liability. Similarly, stock dividend is also a liability, so we can make a copy, and the amount of reserves are written on the equity side. जो भी हमारे पास बैलेंस है रिजर्व करके हमने रखा है वो हमारा ओनर इक्विटी अकाउंट में आएगा. We can also copy the closing balance of the retained earning here. So in this way we have completed our two statements, and we also have completed all the adjusting data. We have copied out all the results of all the adjusting data. Now we just have to copy the remaining items of balance sheet, like cash is our current asset, so I am copying the amount of cash. Similarly, amount of account receivable, again it is our current asset account, so we can make the total of all current assets. In this way we have calculated the total current asset, which is equal to 2,42,000. And now I am adding the amount of total current assets and the fixed asset, so it is equal to 7,77,000. Now let's make a total of debt and equity side. The amount of accounts payable from the trial balance, which is equal to 60,000. Then the amount of notes payable, remember notes payable is also a current liability. The 10% notes payable is given in the trial balance, which is equal to 90,000. Remember one thing, we have also calculated the amount of interest on notes payable, and already mentioned in our current liability the amount of interest. So now I am making total of all the current debt. So here in this way the amount of total current debt becomes equal to 3,08,100. Again, the bonds payable is our fixed liability or the long-term debt. The amount of 15% bonds payable is given in the pre-closing trial balance. I am just copying it, and in this way now we can make the total amount of debt by adding current debt and the fixed debt, which is equal to 4,58,100. The next part is the equity part. As we already have calculated the amount of retained earning, closing balance, and the amount of reserve for office equipment, we just have to copy the amount of paid up capital. Paid up capital is a part of equity. It is an owner equity. So now I am just adding the equity part, and finally we can add the amount of total debt plus equity. In this way we can see our total assets becomes equal to total debt plus equity. So hopefully this complete 3 financial statements are clear to all of you. Thank you.